Will house prices be lower in the future? Should I wait and buy? These are two of the most commonly asked questions I get as a residential real estate broker when helping buyers find the right property. My name is Jeb Smith. I'm a residential real estate broker here in Southern California. And today's video, we're going to discuss those two questions. We're also going to bring up a couple of graphs that show the history of the supply in the United States along with the history of interest rates. And we're going to show how those two correlated together actually affect the median home price and what to expect as we move forward in the next couple of years. As I've mentioned in several videos, my goal here as a real estate broker isn't to tell you to buy a home. It's not to tell you to sell a home. It's just to provide information and let you make those decisions on your own. As someone who has boots on the ground, been doing this for 18 years, this is what I do day in and day out. This is my take on the residential real estate market. So I'm going to put it out there. You can do with the information what you want, but this is the conversation that I have with buyers when they're thinking of buying property. But before we get into this information, I want to take a minute and ask a favor. If you're new to me, new to my channel, it's all about real estate, helping buyers, helping sellers navigate the home buying process. It's not clickbait, it's really just education. I want to guide you through the process, make sense of hard to understand topics, and literally just be a source of information for you. So if that's of interest to you, do me a favor and hit that subscribe button. And if you like the content, give me a thumbs up. And I'm always here to address any questions. So if you have questions as you're watching the video, do me a favor and comment below. I'll always go back through those and help answer them and provide that information to you. But for now, I appreciate you taking the time to watch. Let's get into the reason why you're here. Should I wait and buy is one of those questions that's really difficult to answer because each person's goals are a little bit different. But what I would say and what I tell most buyers is if you're comfortable with the monthly payment, you're buying the house to live there for say 7 or so years, give or take a year or two on either side, then now is as good a time as any. And in a minute, we're going to pull up a couple of graphs, like I mentioned, that's going to tell you why, or I'm going to give you my thesis on those graphs and why I think affordability is going to be, is going to continue climbing, and it's going to be even more difficult as a buyer to get into property. And if you're a buyer out there looking at property right now, you're probably having a hard time. I'm having to put in multiple offers with buyers on every single listing, if it's under $1 million, at least here in Southern California. And so a lot of these buyers are asking these questions. Should I wait and buy? What do you think about the future? And this is the conversation we're having. We're talking about time horizons and living in a property, buying it, being comfortable with the monthly payment, and not buying it to think that it's going to go up next year or the year after, and that at some point in the future prices could pull back a little bit. And we're going to talk about that in a minute, and we're going to bring up another graph and show you where payments are now based on a certain price range, where they were say a year ago, and where they could be in the future if rates continue to go downward, like has been talked about out there. There's a lot of people expecting interest rates to continue going lower. And so that's going to be part of our conversation as well. But what I'm saying right now, should you wait and buy, all depends on your goals. If as a real estate agent, again, I'm not here to tell you to buy, I'm here to provide you with information. But I do think house prices are going to continue to climb. So that's going to put pressure on buyers in some extent, because they're not going to be able to just go in and put an offer in at a certain price point. They're likely going to be in a multiple offer situation, and sometimes have to offer more for property if supply stays like it does now. So let's pull up the graphs that I talked about, go over them with my thoughts on what all of this means with regards to affordability, and then we can circle back and discuss it. So let's take a minute and discuss the housing market, why home prices are continuing to climb, even in the face of a pandemic, which is what we're seeing right now, right? And as I've said in multiple videos, and if you're reading or watching it, you're hearing it, right? It has to do with supply of homes. That's the amount, the available inventory that's out there for buyers to choose from. That is supply of homes. And the supply of homes has been heading downward really since like 2012. Now we've seen a couple of pops in the inventory, but more or less it's continued downwards since that time. And a lot of it has to do with measures that were put in place after the last housing collapse with regards to Dodd-Frank and putting restrictions on home builders. And it's just really limited the supply of homes. And that, coupled with everything going on right now, you just have less available homes for sale. That in addition to record low interest rates. So interest rates are at all-time lows, which is essentially a catalyst for pushing the market higher. So that's why you're continuing to see buyers move up in price brackets, because affordability is they can afford a lot more property now than they could a year ago. And so it's putting buyers that couldn't find property in a certain price range up into a higher price range. And that's going across the board, and it's happening in every price range. And that's why you're seeing low inventories across the board. But let's take a minute and actually pull up a chart of the inventory for the United States for, I don't know what this is going back since the 60s, and take a look at it here. So this is a chart that shows the supply of homes. And I'm going to look down here. This shows the supply of homes since 1965. And as you can see, and how this is measured is if no new homes came to the market, this is how long, based on the current buyer demand, it would take to run out of property, right? So if you're looking at the height of 2008, 2009, when the foreclosures were rampant, when all of that was going on, you had nearly 12 months supply of homes. So that means if no new homes came to the market at all, based on buyer demand, it would take roughly 12 months on average to sell all of those properties. Well, that was the most ever at that time. Well, if you go look at 2011, 2012, which is when the market really started to take off, home supply got down to 4 months. So a normal market is somewhere, at least in Southern California, 6 to 7 months supply, maybe 8 months is a normal market. So we've had half of that for, back in 2012, which is why the market started to take off. And you can see that it hit that somewhere around 2012, 13. But look at today, 2020, we're back near the very bottom there. That shows, basically we're at a 4-month supply of homes. So we're very, very low. And this is a nationwide average. This isn't just Southern California. This is everywhere. And so that, coupled with interest rates, is why housing prices continue to rise. Now let's take a look at interest rates. So this shows the 30-year fixed rate average in the United States over the last, 15 years or so. So it goes back to 2006, and it shows where interest rates were at the top of the housing crisis. So interest rates were on average across the United States somewhere between 6.5%, 6% at that time. And then you saw them trend lower through 2013, and interest rates rise, so on and so forth. But look where we are today. Very, very low, right? The lowest we've been in the last 15 years. In fact, the lowest we've been ever recorded. So you've got record low interest rates, which is completely different than where we were back in 2008. So you have housing that was at 12 months. We're now at a 4-month supply. You had interest rates that were 6.5%. You have interest rates now that are, I think, 2.91 is the average 30-year fixed rate. Median sales price. So if you go back, this chart only goes back to 2019, but it shows that the median sales price in January of this year was just under 268, say 266 or so. And today it's at 304 roughly. So the reason house prices are continuing to rise is because supply is low, interest rates are low, and it's driving home prices up. Affordability, people can afford more homes. You got more buyers out there looking, and there's multiple offer situations. And because affordability is higher, people can afford to go into higher price brackets. And that's why you're seeing this across the board. Okay, so let's take a minute and talk about affordability. Let's talk about how prices have risen due to interest rates, and that's given buyers more buying power. And what happens? What happens if the market pulls back 10%? But rates go up? What happens if rates go down lower in the future? Now, I created this small graph that I'm going to use here. It may be difficult to understand if you're not reading it, so I'm actually going to read it and go over it with you. Now, keep in mind, some of the information is hypothetical, so it's not 100% fact, but some of it is. So let's take a look at the graph here. I'm going to pull it up just so that you have it. So this is something that I created that shows where prices were last year or where interest rates were last year and shows affordability. So say 2019, at the beginning of the year, rates were around 4.75%. So if you put 20% down on a $700,000 house, your principal and interest payment was roughly $29.21. Okay. But this year, you can actually purchase an $875,000 house, putting 20% down, with an interest rate of 3%, which is around the average. It's just above the average, in fact, and your payment's $29.51. So you get a $175,000 more house for $30 per month. So you can see why buyers are buying into higher price brackets and prices are continuing to rise, because people are pushing up prices because of affordability. Now, in 2021, we don't know where interest rates are going to be. A lot of people are predicting them lower. A lot of people are predicting them to stay the same. Either way, I think the majority of people think that interest rates are going to stay low. But let's just say they drop 0.5% to where they are now. You could actually buy a $935,000 house if you were able to put 20% down. If the interest rates, again, if they drop 2.5%, that's not saying the interest rates are going to be 2.5%. I'm giving you an example. Your payment would roughly be the same across the board, but yet you could afford more property. And it's all because of interest rates. Now, a lot of people, again, believe interest rates are going to go low. I think that's the one thing that people can't agree on, is that interest rates aren't going anywhere, because it would crush the economy if rates went up. So I think we're all on the same page that interest rates will stay low. The question is, what happens with housing? So let's talk about that for a minute. So if we use these same examples here, and we talked about this year, the sales price of $875, if home prices declined by 10%, but interest rates went up a little bit, say 1%, that would still be a great rate, 4%. So that would give you a sales price of $787. If it dropped from $875 to $787, that would be a 10% decline. Interest rate would say be 4%. Because typically interest rates and housing prices move adversely. Your payment would be higher at $3,008 than it would today on a property that's worth 10% more than what you could be buying in the future if rates went, if property values went down by 10%. And the same, I did the same example for this example. So if prices, if this all came true and prices did decline to, by 10%, that $935 then becomes an $841, interest rate of 3.5%, your payment's just over $3,000. So you're paying more money for less value of property. And that's why you're going to see home prices continue to rise for the foreseeable future. So as you can see from those graphs, interest rates have continued to go down over time. Supply is near all-time lows, dating back to what they have on file. And you got median home prices that essentially record highs across the United States. And then you can see from the interest rate comparison that I did is that a lot of it has to do with people being having higher affordability. So people that were in a certain price bracket last year are now in a higher price bracket this year, and people in the lowest price bracket are now in a higher price bracket. And so you've got all of these buyers that are essentially moving up the prices of homes because they can afford more property. And with supply being at all-time lows and interest rates likely staying low for the foreseeable future, chances are this is going to continue for some time. So I don't expect housing prices to go down anytime in the near future. Now, I've done videos on foreclosures, on the eviction and the moratoriums and all of that good stuff, which I'm not going to discuss here. I'll link to a video if you want to take a look at that information. But I personally don't see that all of those properties coming to the market. And I say all of those, I'm not expecting this huge wave of foreclosures or this huge wave of properties to come to the market to start. But those properties that do come to the market, I don't expect them to change the landscape, at least for the foreseeable future, of the real estate market. And so while rates stay low, supply will likely stay low, and you'll continue to see a housing market just like we've seen for probably the next year or two. But time will tell, right? I mean, as more information comes out, I'll continue to do these videos and continue to give you my 2 cents on them. And it's exactly that, my opinion. It's not, you know, this isn't a crystal ball, but this is from somebody who's in this every single day, networking with agents all across the country who are experiencing similar situations, and I'm trying to take that information and provide it to you so that you can make informed decisions. But for now, I appreciate you taking the time to watch. I appreciate your support. If you haven't already, do me a favor, give me a thumbs up, subscribe if you like the channel, and leave me a comment if you have questions or want to tell me I'm crazy. So anyhow, appreciate you taking the time. We'll see you again soon. Have an awesome day. Bye-bye.